Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician. That gives you a Series 86, and I'm an educator in my retirement. I love to share my ideas with you and have you learn more so that you can become more successful and so that you can understand the professional side. The retail side, there's all kinds of gurus and there's tons of training and there's lots of commentary and everything, but you rarely get to actually listen to and speak to a professional who's actually licensed with the SEC. And that's an important part of what I do. I teach things that you don't hear or learn about or know about that can add to your education and improve your income from trading stocks, whether you're just doing it part-time or if you're serious in trading it as a business. Now, what we have is an earnings season that is coming up. And it's a tough one. Trying to figure out who's going to do well and who is not going to report great earnings is a tough one right now because we've had quite a few things going on. There's a lot of political things going on. There's a lot of new changes going on with AI technologies and 20 plus other new technologies that are coming to market rapidly. And so there's just this ton of information and a plethora of misinformation that you have to pay attention to and be aware of. Microsoft is a good example because it is a company who's dealing mostly with selling things to small businesses. That's major part of its company right now. And it has Azure and is working with AI and is providing a lot of free AI and a lot of other things and activities. So how are we doing? There are fundamentals in the charts. Every time you see a stock shifting sideways and it forms a nice little rectangle, you have identified the fundamental zone of that time. The buy-side institutions will maintain the price level. If the stock is going to improve, it's going to start showing improvement very soon. It reports about October 29th, that's an estimate, and it has 83% of its shares held by institutions, which is a high number. It's not super high, but it is not low like many other larger corporations have much lower, like 60%, which is not good. So you should pay attention to the percentage of shares held by institutions, PSI indicator as well. You want to trade within this range and find if there's going to and find nudges or things that tell you that the stock is going to move up. It had declined, but suddenly, as it moves down with a big black candle for this pattern, huge one here, so we knew it was going to go down, but it reversed very quickly and moved back up. That's because this is a fundamental level. Now, we have smaller funds managers, and they do not use technical analysis. I wish they did because they would do so much better. They're a large group. They are anywhere from 10,000 to 15,000 small funds managers. And most of the time, that's whom you are trading with. You are not trading with the dark pools or the professional traders because you haven't discovered what you need to see in the charts that tells you that you are trading with the dark pools and not the small funds managers. Small funds managers use VWAP orders, volume weighted at price. So the more volume there is, the more their orders trigger. So when we have a huge gap down and there's high volume, they're going to trigger their orders are going to trigger automatically to the downside. So a lot of the smaller funds were driving price down, and then suddenly it just reverses with all these small candles. And these are nudges. These are support the market and keep this stock in its fundamental zone. It won't go higher than this. If it tries to break out, it may come back down. It takes 3 to 4 tries for a stock to break out. Now we have a whole month ahead of us for Microsoft to start showing us whether it's going to have a weak report or a strong report. Now there's no other fundamental support level until you get way down here. Now that would be a catastrophic situation if it dropped this far. But you also have to remember that HFTs are using AI now, and AI is flawed. It is not a perfect solution yet. It will take years before it is really honed out. And HFTs have been modifying their activity and using AI because they have made so many mistakes, and they can get their hand slapped by the SEC if they continue to push a stock in the wrong direction, especially to the downside. Nobody cares if the stock is speculated or runs up and runs up and runs up. But the SEC and FINRA and CFTC and all the other regulatory entities are concerned that no professional side entity disturbs price and drives it down deliberately when it should not be going down. Sell-side institutions like to sell short, and so they nudge it down, but they don't drive it down. They simply wait for an opportunity, which is called a void of buyers, which I talked about earlier, that causes stocks to gap and run down because there are no buyers until the sell short buy to cover, which is way below. This is not the situation we have with Microsoft. We have a nice, steady sideways pattern. This went way beyond the fundamentals of the company at that time, and it corrected itself back down, but this is too low. So now we have a nice tight buy zone as we wait to see if it has time, it attempts to break out 3 times before and it breaks to the upside, then it's going to gap up because HFTs will gap it up to the upside with good news. Good news has to be revenues and earnings. It may have great earnings because it may be able to have its uh, uh, chief financial officer move assets from being an expense to a depreciable asset on their balance sheet. That's what they do all the time. So earnings may be great and revenues may be down. That is not a good forecast for a company to continue to move up. It's a negative. But most of you just worry about the earnings, 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 earnings. Worry about revenues and earnings quarter over quarter. Beg the yearly stuff. It is not important. It is ancient history. What you need to be watching is the last 4 to 6 earnings and revenues quarter over quarter over quarter. You can get that stuff on NASDAQ. It's very important. So if you want to watch this and keep an eye, it will, if it's going to break to the upside, it will start nudging, but it may collapse back down and then go up and test that resistance again, because this is pretty solid resistance for a swing trade. This is actually a platform and is better suitable for platform position trading, where you enter the stock and you hold it for a month to 3 months to 6 months. This is where you, if you're busy and you're trading all, you don't have time to trade every day, and you have a career and you really like to trade stocks, but you try to day trade them before you go to work and or after hours and that type of thing, and you're not being successful. Switch to platform position trading because you can build a huge capital base very relatively quickly, capital base on your percentage of capital that you have. You can increase it quite a bit, and you can also have a more comfortable and more confident trading attitude. Everybody says, how do I build confidence? How do I build a psychology? Do I go to the mirror and tell myself every day, be confident? No, confidence comes from success. If the more successful you are, the more confident you're going to be. You don't have to try to be confident. You have to build and establish a trading pattern that is right for you. Day trading is not right for everybody. In fact, it's wrong for 99% of you. Swing trading is more suitable, but also you have to have that strong foundation of confidence and know that the stock and understand how it's going to break or move up to the side, or if it's going to break to the downside. And you can see it in this pattern if you follow and check it and put it on a watch list and study it. Then you build your confidence naturally, and then it stays and is stable. But if you have a profitable trade, then loss, 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 and profitable trade, and loss, 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 then your confidence is never going to be strong. There's nothing you can do to make it right until you fix the problems with yours. So consider platform position trading. It is a great way to get into a stock, hold it for a period of time. It's great for busy people. It's great for people, stay-at-home parents. It's awesome for retirees who just don't want to spend all day trying to do day trading, or even in the morning or the evenings. It's you set it, you hold it, and you wait for it to continue to move up, and you make a lot more money than you do in any other trading style, bar none. I'm not kidding. Day trading is the lowest income revenue you can have because there's so many losses you take. There's so many whipsaws. It's very, very difficult. I've kind of spread a lot of information about different things, but really, You want to be trading, be prepared for what's going to happen, and it will be obvious in the chart if you know what you're looking for. I'm Martha Stokes, and I want you to trade wisely. Thank you for joining me today.